Welcome to this week's Beyond Bitcoin Hangout. These hangouts are brought to you by the Beyond Bitcoin crew. We encourage everyone to freely share these recordings and to help spread the knowledge and benefits of our DPost 2.0 blockchain technology that we all call BitShares. While listening to this recording, please feel free to visit our website, beyondbitcoin.org, and be sure to stay tuned in for some additional information at the end of the recording. As always, we would like to say thank you, and we appreciate your support. So please continue to vote for our delegate or worker contract so we may continue providing these valuable services to our community members. So once again, welcome, and please enjoy this week's Hangout.
Welcome everybody to a holiday edition of Beyond Bitcoin on November 27th, Friday, 2015. We're joined every week by Bytemaster of Cryptonomex, and he gives us project updates. These days, he's starting to tell us a little bit more about thoughts on worker proposals and plans, and we're starting to move into the new governance area of BitShares, where we're finding ourselves. So we're going to leave that first maybe 10, 15 minutes open for Bytemaster to give us any updates in the cryptonomics world, and then we can move into community questions. With that said, Bytemaster, do you have any updates for us on this Thanksgiving weekend?
Now, you can imagine it's been a relatively slow week on the feature development side of things, but a new release did come out yesterday. I want to thank SVK and others for working hard this week to get that out with numerous bug fixes and new features. I'm very excited to see how each week the wallet is getting better. Slow, steady progress will eventually get us to where we want to go. So there's been a lot of discussion this week on the nature of smart coins, on the market rules. I was reading those on the forum. I think I'd like to review some of those today, just so everyone understands the trade-offs and the parameters associated with things like forced settlement versus not forced settlement, and so on and so forth, especially now that forced settlement is exposed in the user interface. So we can ask some of those there. So there was the bug from last week of a refer income being off by a factor of 100. Numbers weren't scaled properly in the command line wallet, which caused the blockchain to create accounts with the wrong configuration. We've identified a fix for that. I believe Ben was working on it this week, but of course he went home this week, so I don't know the exact status update on that. But we have a number of bug fixes that are going to be rolled out probably next week and maybe take effect the week after. We're trying to do things more deliberately than brushing things out. So the primary thing holding us back is, of course, testing all of the changes we've made. It's one thing to make a change to the code and say, yes, I think that will fix it. And it's another thing to know that it's actually fixed. So we're going to...
Data security node, I hate to interrupt real quick, but I don't want to get it lost. When will the refer bug be fixed? Is there an ETA?
That's the question I'm answering. We want to minimize the number of times that people have to upgrade all their nodes for a hard fork. We're going to bundle up the referral bug fix, the pegging, using the feed price as the limit for margin calls, and then also refunding order creation fees when you cancel an order before it's filled. So those three things, one of which is a worker proposal, are going to be rolled out together. We should have all the features done in the coming week and then roll it out and apply it to the blockchain the week thereafter. So I think that's part of what we're trying to do, is release hard forking changes at most once a month, unless it's an emergency. And then we do web updates once a week with various user interface tweaks. That's what we have going on there. One of the major things that was discussed this week was a new way to raise money to build features. And I think that it's worthwhile to discuss that on this mobile session. There's a lot of debate about what we should prioritize and how it should be funded and how much we should pay for things. There's a large contingent of individuals who want to focus only on the market and making it the best exchange possible. And then there's another group of people that would really like to have the stealth transfer features. This is blinded confidential features in the wallet. And I'm of the opinion that without privacy, a lot of people are hesitant to put money into the system, and that we need both. But of course, I don't have the ability nor desire to push through certain priorities. And we only have so many worker proposals that can be funded at any given time. So I put together a worker proposal for $45,000 to build the user interface and migrate the cryptographic algorithms from C++ to JavaScript for doing these blinded confidential transactions. It's almost an entirely new mini wallet because it has no overlap with the existing account structure, right? All confidential accounts are just public keys. They're not registered on the blockchain in any way, shape, or form. And you have to have a send and a receive feature associated with it. There's going from public balances to confidential balances, and there's going from confidential back to public balances. There's a lot of UI elements there that are new. That's the primary reason why the price is where it's at. And quite frankly, I probably have underestimated the time and effort required to do all that, but that's the number I put out there, so I'll stick with it.
When I look at the actual stealth transaction description that you put out there some time ago about how to do stealth on the CLI, are you envisioning a whole lot more functionality than what's currently implemented in the CLI?
The only additional functionality than what's in the CLI would be the ability to register a new account with a stealth balance.
Well, that's pretty important, but thank you for the answer.
One of our forum members, is he here? Yes, once upon a time is on this mobile session, contacted us offering to pay to implement that feature if he had an opportunity to get a return on his investment. And I responded that, well, we could implement a hard fork that would allocate the fees from stealth transfers to him to reimburse him for funding the feature and also to earn a healthy profit. That led to a beginning of a lot of discussion and ideas around basically crowdfunding revenue sharing for new features. And this idea is very, very powerful for BitShares because it means that anyone who wants to implement something that has new operation types, say you wanted to implement eBay on BitShares, you need new operation types for starting an auction and so on and so forth. Or say you wanted to implement the instant orders like Bitstamp has. You need new operations for creating and canceling instant orders. If those features are used, the person who funded those features can get compensated by the fees charged on those features. It would be like having a mini blockchain within a blockchain. Each individual area is a profit center, and the people who put up the money to build out and expand that feature set can earn revenues from the blockchain when their features are used. Now, originally the idea of worker proposals is that everyone would socialize the costs and socialize the rewards. We all pay for it together with a worker proposal. We all reap the benefits when the feature is adopted and used. The challenge is we have limited budget for how many things we can fund simultaneously, and not everyone agrees on the risk reward for a particular feature, which means that there's always going to be someone who's unhappy that we fund a worker proposal to do X when they would rather have funded it to do Y. So
it's a collective perspective versus an individualistic perspective of profit sharing and revenue generation.
Correct. So what we can do going forward is have a new user-issued asset feature that whenever certain operations are executed, it automatically buys back some of that user-issued asset. Or we can divide up the payments of a fee among several different parties that have contributed. The network for providing the basic infrastructure, the user who funded it, and of course anyone who helped crowdfund it. I think crowdfunding helps diversify the risk, which is good. So this is, I think, a great idea, a great opportunity for BitShares to become a platform with a lot of innovation. The primary thing we need to establish as a blockchain and as a community is that we never renege on commitments. If we promise someone a cut, 20% of all stealth transfers for life, we need to not change the code in the future to break that contract. It also means that we need to be wise enough not to allocate 100% of all funds to someone who funds a new feature, because every new feature is the foundation of yet another new feature. And as soon as you allocate 100% of something, there's nothing left over for us to allocate to someone who comes along later and wishes to expand the power of those operations. But I really think that it'll be great to see how that evolves. I think that from a crowdfunding crypto, whether or not it's a security issue, I think is not really an issue in this case, particularly if payment isn't made until the feature is delivered. In that case, there is no risk on someone else's performance, and 100% of the returns are hard-coded into the actual algorithm itself. So we remove trust from the equation, at least from the people who do the crowdfund. The people who do the work, like Cryptonomex, would be trusting that the crowdfund program would pay once the feature was delivered.
Is there a way to lock those funds up and then have the community vote to unlock them when milestones are achieved?
There's always a way to do anything. It's just a matter of time and money.
Sure.
So initially, a lot of this stuff will have to be done manually with multi-sig accounts and so on and so forth. But if this particular process is one that we can generalize, then I think funding a worker proposal to formalize the process a little bit will enable more of these types of features to happen in the future. I'm very thankful for people like Once Upon a Time who are risking their hard-earned money to build features for BitShares and to help grow the BitShares ecosystem. I think stealth transfers are a huge part of financial freedom and very critical for the ongoing success.
Out of curiosity, where do we stand on the update portion? I mean, I just want to make sure that you're not feeling cut off or anything at this point.
I'm not. I mean, I got lots of things I like to discuss, but I figure I'll answer some questions first before I start asking some questions.
Travel Asia says, you mentioned stealth transfers are important to bring people into the ecosystem. What about cold wallet options?
Right now, it's trivial to have a cold wallet. You generate keys offline, and then you change the permission of your hot wallet, and you're good to go. There's a little bit more work that would be necessary to sign a transaction offline and then copy it to an online device. But I think that most transactions could be represented as a QR code. And so it should be relatively easy for someone to take the wallet code that we have now and generate a transaction and display it as a QR code, and then have an online wallet read that transaction. I think that's the main thing, is tools for signing. But as far as putting funds into cold storage, it's very easy.
What is your perspective, Bytemaster, regarding the priority of the stealth feature versus other activities that are ongoing right now? Getting the exchange in a very refined level of refinement there.
I'm of the opinion the exchange is just going to keep getting better on its own as we learn how to improve it. We have one person working on the exchange right now. SVK has been our primary one developing the exchange, and he's the primary one that's pushing updates to it. We have lots of other developers that can be working on other things in parallel. And so I think that stealth is not necessarily, it's not an either or proposition. I say we do both.
I see. All right. Well, I guess could the development of the exchange functionality be improved with more manpower or not? Speeded up with more manpower?
To some extent, it can. The biggest features we need for the exchange side of things right now are API improvements. And the bottleneck there is our C++ developers, which includes me and Ben. And of course, Ben has been focusing on the various things coming up in the next hard fork, some of which is exchange related, right? Getting the fees to be more consistent with what people expect. So we just put a offer out to hire someone who we'll hear back from soon. And if they start, then we'll have some extra manpower on the C++ side as well. So I'm excited about that. But yes, there's improving the API to enable bots. We do have a large, I guess a really big customer that wants to move a large part of their exchange business to BitShares. And we're talking huge. And that's what we're working on figuring out how to do on the back end. So lots of stuff happening, and we're trying to grow our team as all this work starts flooding in.
As this happens and you have these types of projects, where do you stand on, I mean, you said you're going to have to grow your team, which is telling me that there's going to be various priorities, right? How do you plan on seeing this play out? Like if a worker proposal doesn't work out and an exchange wants to pay for this, is that how it's going to work? Are they going to pay for it, or are you guys going to be doing this and adding it on and hoping for a worker proposal, or what is, how does this work?
Well, how everything works in life, we do things for a profit. We prioritize mostly based on profitability. The highest, most profitable actions get our highest priority. Now, we have lots of factors in there. Of course, we want to see BitShares succeed, and there's non-monetary forms of profit associated with things. But in the long run, sustainability depends very much on profitability. And so that's, if there is a limit to the amount of manpower we have, or the amount of time we can devote to something, we're going to go to the highest bidder, more or less, as long as it's consistent with our philosophy and our vision. But that's how we plan on resolving those disputes. If we were to invest our own money to build a feature, we would probably take an approach very similar to Once Upon a Time and ask to be compensated with fees from the network for use of the feature. We don't expect anyone to do anything for charity. We don't believe that's sustainable, either to the network or to the people who are giving of themselves for the benefit of all the BitShares holders. We're all working to promote BitShares. BitShares is, of course, our flagship product from Cryptonomex. It's demonstrating the power of what we've produced, and we want it to be successful. At the same time, we're also working very, very much toward making BitShares stand on its own, where we are an advisory role. We can propose things and we can give advice, but there was a discussion on the forum skill sets, and where my skill set ends and someone else's needs to up. And I think BitShares is pretty close to that right now. In particular, I'm an INTJ personality, which if you go and read up about it, it'll explain a lot. I see the vision, I solve problems, I put together the big picture, and I prove that something works. But when it comes to going the last detail-oriented, let's take this to market and grow it, that's a skill set that other people have. And as one person pointed out, Charles Hoskinson and I were a perfect team in that respect, if you look at skill sets. So if we could find someone or some group of people, and there are many people who have stepped up and are doing this type of thing, to take on that role with respect to BitShares, I think the sales and marketing and business strategy, the slow and steady, methodical getting the features that have been proven adopted by the masses, I think is where we need talent. And I hope that things like the referral program and worker proposals and committee member positions have created an environment where those types of individuals can step up and make money. Recognizing what I can and can't do is probably the best thing for everyone involved, myself and the community, because put people to their best use and don't expect everyone or anyone to be good or excellent in every possible area. So I think we're rapidly moving toward that.
Yeah, it's been interesting watching the growth and evolution of BitShares go from what it was in 1.0 and now seeing how everything is starting to take root in 2.0. iHash Fury asks a question here. Could we clarify basic mechanics of SQP, short squeeze feed price, in relation to the balance of the following statements? Lower SQP should increase liquidity. Higher SQP, better black swan protection. As some shareholders are asking it to be reduced to 1,000 to increase liquidity. Should committee members have control of this feature?
All right, so this is an example of a parameter for which I did not know the best setting. I recognize the need to protect shorts in thin markets from being margin called and having to accept ridiculous prices that are 50, 75% off from the external prices. At the same time, if you completely protect them from having to cover at any price below the feed, then there's a chance that they'll be in margin call territory. They should be margin called, but because of lack of liquidity in the market, they won't be margin called, which means you'll end up with a buy wall at the price feed, and that buy wall will sit there as the price falls and eventually hits a black swan price, and they're margin called. So in order to protect against black swan, we need to make sure that the market clears, that the people who have taken on debt and are now lacking sufficient collateral are forced to cover their debt or post additional collateral. Right now, it's set up so that if you're margin called, you could pay a penalty of up to 10%. The proposal is to reduce it so that you pay a penalty of 0%. And I think making the penalty 0% relies too much on the price feed being the final decider of the fair price. I don't think the price feed can react fast enough to market demands, and I think that the amount of liquidity at the price feed should be very small. And if you have a large position that needs to cover, you're going to have to deviate from the price feed to cover that position. There's no other way around it. So I appreciate everyone's desire to not have shorts get penalized, because we need shorts to enter the market, and no one likes it when a short gets penalized. The long and the short of it, no pun intended, is that you only are at risk of getting penalized if you've taken on a short position, you haven't posted sufficient collateral, and the price is moving against you. If you are a short who's posted plenty of collateral and you proactively cover position rather than waiting for the market to cover it for you, then you'll get a better price. The goal of making penalties harsh around the edge cases is to force people to take responsibility. When you go short, you are borrowing money, you are taking on debt, and the system as a whole is accepting some risk of your default. And you yourself are taking risk of your default. You basically, when you take on a short position, saying, I promise to buy this back at $1, and if my collateral falls, I promise to cover it, as quickly as I can. So I think it's a bad idea to go down to 1,000%. The fix we are putting in will make it so that a margin call won't trigger except at the price feed, but when it does trigger, then you can get 10%. Right now, there's some weird cases where you can get triggered earlier than desired, which causes people to lose some money. So we're fixing the pathological case, which could temporarily be fixed by going to 1-to-1 short squeeze protection ratio. But I think that there's confusion in the minds of people about the impact of different parameters, what they actually mean, as well as understanding the underlying causes of people taking on losses. No one who has had sufficient collateral on their position has taken any losses. And that's the moral of the story, is maintain your collateral and don't cry when you get margin called to cover your debt. It's no different than on Poloniex when something happens and you're forced out of your position and you walk the book and you get a terrible price. They forced you out of your position because the market got thin enough. You were forced to exit. If you don't force people out of their position because you're trying to guarantee them a fair price, you risk the entire system going bankrupt and risk everyone, BitUSD and the other shorts, right? So you don't get something for nothing. And in this case, you don't get to borrow money and be guaranteed a fair price, right? You're taking the liquidity risk when you borrow. And in a highly liquid market with lots of orders within 10% of the price feed, if your size of your margin position is a small fraction of the available liquidity, then you're not going to get a bad price, even with the short squeeze protection in there. So we're looking at an artifact of illiquid markets and people's sense of entitlement to a fair price, even if it comes at the risk of the entire system. You're not getting something for nothing when you take a 10% premium on your bid asset. The person was holding USD and they're being forced into, they're saying, I'm willing to buy shares if I can get a 10% discount. Otherwise, I want to keep. That's liquidity provision. The 10% fee is the cost of that liquidity. They weren't necessarily willing to buy BitShares for 5% or 1%, right? So it has to be, the reason why there's such a high premium is because that's the cost of liquidity right now. They're not getting something for nothing. You're getting to exit your short position and maintain your collateral. Basically not default on your debt.
I just want to clarify here real quick for anybody who's listening to this. Bytemaster is explaining there's some questions and comments from Malcolm June JMR, and he's saying there are no sellers because no one wants to enter the market because of an imbalance in risk profiles. It is a bad idea to have SQP at all. It is completely different than Poloniex. To Bytemaster's earlier comment, there is no liquidity on BitShares. And then he says, if you get a 10% premium on your bid asset because of SQP, you are getting something for nothing. And to follow up with what Bytemaster had said, Malcolm says, how is that liquidity provision? There is no liquidity to speak of. And I'd assume that some of the things that are coming online are going to help with that liquidity, but maybe I'm incorrect. I'll stop and let you answer, Bytemaster.
What do you mean there's no liquidity to speak of? If people are able to exit their short positions, that 10% premium, that's someone's providing liquidity. They're willing to go short and let you out of your short position. So think of it that way. If you're short, you're running out of collateral, you want to exit your position, you either buy on the market ahead of time, or you have to find someone else who's willing to take over a short position with more collateral. So the incentive for someone else to go short in order to create BitUSD, in order to sell it to you so that you can exit your short position, is that 10% premium. Now, when the market has only got a dozen traders or 100 traders, you get wide spreads and you face significant opportunity costs if you're forced to move a large amount of money very quickly. So, like I said earlier, all of these issues only impact shorts who have low collateral. If you've got very high collateral, then you're not at risk of being margin called, and you can voluntarily cover at a price that you think is fair by placing orders and adding liquidity to the other side of the book. Now we're in this little dilemma where, because of perception and confusion on these issues, a lot of people don't want to take risks because they don't feel like they understand the system. They don't think they understand the risks, and that's causing some people to step back. Now, someone asked, whose responsibility is it to provide liquidity? Is it my responsibility? Is it Cryptonomex? No. Providing liquidity is a business. It's traders who understand the rules, they look at the market, and they provide liquidity on either side. But it's not a risk-free business. If you simply try to buy and sell on either side of the price feed, and the market starts a steady trend in either direction, you're going to lose money because everyone's going to sell to you, and then no one else is going to buy back, and then the market's going to move. Right? So it's not a cut and dry, well, why doesn't someone just provide liquidity? Now, the only way that we're going to get liquidity provided in these markets is if either there's a widespread and someone can actually make money doing it, and there are people that are providing liquidity right now, but of course people don't like the spreads right now. If you want to tighten those spreads, the profit, the money is going to have to come from somewhere else. So that means a worker proposal that absorbs some of the losses in order to bootstrap the liquidity. Right? And it's one of those things that, it requires a lot of current to start your car, but once it's running, it doesn't draw on the battery at all. To jumpstart some of these markets might require a large infusion of capital, of people taking irresponsible risks to provide liquidity. And that might just be what has to happen.
Bytemaster, you participated in the forum with Monster regarding a discussion about DPAS. Do you have any follow-up comments about that? He raised a rather disturbing issue about the amount of votes that BTC38 has at their disposal.
Yes. So DPAS has this trade-off between those who are actively participating in the voting process and those who are actively participating in centralized exchanges. There are more people putting their money into a centralized exchange than there are voting. That is not a problem with DPAS, that's a problem with centralized exchanges. That's a problem with people trusting a large portion of their funds to an entity outside of the blockchain. The problem solved by having people like BTC38 move to gateway status, but of course they don't want to do that. So that leaves several options here. One, we can incentivize voting, or we can disincentivize not voting by charging people a fee, a percentage-based fee, if they've got a large balance and they're not voting. Now that should increase the voter turnout, which will thus increase the amount of stake outside the system. The other thing is, as the internal exchange matures, the amount of money kept on external exchanges should decrease as far as BitShares is concerned. As a community, we should try to move as much trading as possible to the on-exchange, on-blockchain liquidity providers. It reduces the probability of any large exchange getting hacked and then dumping all those BitShares on the market. That right there, it's a threat that applies to all proof-of-stake systems. If BitShares was using the exact same algorithm as Next or Peercoin, then the concentration of power represented by the exchanges would mean, it would mean that the exchanges would produce the vast majority of blocks in any particular window of time. It means they have the ability to control the complete control of block production if they wanted to. And by putting your money on an exchange and keeping it there, you're effectively supporting that. The other option is to have the exchanges nominate proxies outside of the exchange to vote if they don't want to be active in the politics of a particular blockchain. But at the end of the day, these exchanges have a large vested interest in the success of the protocol and of the blockchain because they're making money from transaction fees. By not voting, they are effectively allowing everyone else to decide, and they're staying neutral. It means that all the stake held on the exchanges is as if it was adding to the votes of everyone else. And these are people that are trusted. They don't have anything to profit from destroying a blockchain. So the only risk we have right now is the risk of a large stakeholder getting hacked. And I don't know an easy solution to the problem of a large stakeholder getting hacked, other than perhaps implementing rate limits on the rate at which any particular account can transfer funds. If you had rate limits that said that any account with more than 10 million BitShares and it could only transfer 1 million per day, then you would see exchanges diversifying into more than one account. If they were hacked, you'd know that they couldn't possibly be hacked by more than a certain percent of their funds on any given day.
I'm not sure that solves the problem. If somebody was really out to be, to take over, to really wreak havoc on our system, they could diversify they could have multiple accounts and all point to the same proxy and consolidate their voting power into one place and get around the limits that you're proposing through the individual accounts by purchasing. So, I think there's a way to get around it if you have that intent. But I'm not sure there's anything we can do about that right now.
Right now, you're talking about these centralized exchanges, right?
Yes.
So at least the security aspects would be a lot more resilient if they moved their order books over to something like where we are, right? Like having the order books actually BitShares based, like say OpenLedger has.
Yeah, there's lots of trouble with being a gateway, and it doesn't completely protect everyone who's got open orders in those markets. If a gateway's asset is hacked, right, the keys that control the issuance of the tokens for that asset, then
sure,
they can issue an unbounded amount, dump them on the market, and anyone who had open orders ends up holding the asset without any backing. That's very similar to having your BitShares on a centralized exchange. So it means, you at least when the BitShares are in your control on an open ledger style system, you're still voting with your stake. But yes, anytime you have one person who has the ability to print a token and buy a lot of BitShares or controls a lot of BitShares, they're going to have influence. That's just the nature of the system. Influence is proportional to stake. And if you want to have maximum decentralization, you've got to make sure that you don't have concentration of ownership.
May I step in here for a second?
Sure.
Because that's exactly what I tried to be working on, to provide a decentralized gateway for coins, because a decentralized exchange is only really decentralized if you're not centralizing the deposits and the storage of the coins. And that's not solved. And I have a worker proposal running for that. I got a lot of bad feedback, but that was mostly people who didn't seem to really grasp the concept and the problem I'm trying to solve here, according to what they wrote. And I want to urge everyone to have a look at that again. So this
Can
may
you provide
happen.
a link for everybody?
Yeah, I will.
In the ideal situation, you'd have multiple independent parties be multi-sig on a Bitcoin address for receiving Bitcoin deposits, and then they would be multi-sig on a user-issued asset. They would all process Bitcoin deposits and withdrawals the same way, because they can all see the requests and the addresses and the memos.
Exactly.
Yes.
There is Next Supernet, may be known to some of you. It's trying to do that, but they still have a semi-centralized structure by running fixed nodes which handle the process, the transaction signing. And I've worked on something similar on another blockchain, but I came to the conclusion that the only real solution to that problem is if everything is peer-to-peer, if the signing nodes are voted in and can be voted out. And yeah, that's what I want to do.
Yep. With threshold multi-sig, it's possible to do a lot of that stuff. It's a very complex project, so I'm glad to see someone's looking at it. I would like to address one last thing here. Mal, I can't even pronounce your name. It says, Bytemaster's answer for why there is a SQP is essentially that shorts are paying for liquidity. If they wanted to pay for liquidity, they could pay a 10% premium for the bid asset they needed to close their position on their own. Bytemaster is suggesting that the SQP is useful for shorts when it's not. Yes, someone who's short can always pay a 10% premium or more to get liquidity. It's useful to shorts in that it's not, the network won't force you to pay more. If you're below the maintenance collateral ratio, you need to close your position. The network is being gracious by not making you close your position at bigger premium for your liquidity. That is of tremendous value to shorts. To say it's not useful to shorts is to say it's not useful to have a price cap on how much you'd have to pay. Now, without it, you'd have to pay a much higher price to get the liquidity you need to exit your position because your collateral is below the maintenance requirement. There is tremendous value there. I'd like to change gears a little bit and talk about some philosophy. This is mainly to get feedback from you all about stuff that I've been thinking. This has to do with the concept of privacy. Everyone wants privacy, and there's a thread on the forum right now talking about the need for controlled access to data and debates about the merits of big data being able to analyze your data. And what I was thinking the other day, even before this thread came up, was that information is power, and that there's a huge discrepancy between the information available to governments and the information available to individuals. The government knows where we all live. They know how much money we have. They know who we communicate with. They know everything about our identity. They can steal our identity at any time, right?
Yeah.
But we don't know anything about them. We don't know anything about our neighbors. We live in a world where someone knows everything, and they can use that power to enslave the rest of us. And the rest of us are kept walled off from each other because we're afraid to let each other know about things. And I think it gets even more fundamental. The reason the internet is insecure is because we depend upon privacy. The privacy where someone learns your mother's maiden name and your birth date and your pet's names, and then they can go and pretend to be you because they happen to know information about you. So our entire financial system, what would happen if all information was made public? As in, if someone knows it about you, everyone knows it about you. It would mean that banks wouldn't be able to rely on security questions to authenticate you anymore. It would mean everyone would have to adopt public-private key cryptography, and that your secrets would be your secret. The only thing that you keep private is your private key. It would mean that the people would have the ability to know who all the government agents are, who's a cop, where the cops live. It means we would know everything about everyone, which would level the playing field. Of course, nobody likes the idea of being exposed, but by trying to protect our privacy, we only protect it from our friends and our enemy, in the sense that they're using this information to have control over everyone, is benefiting from it. So, question is, are we barking up the wrong tree by trying to create systems where we protect privacy, right? Because as soon as you compromise a server and that data is published, privacy is gone forever. And we can assume that governments can and bad guys can get access to this information. which means the only people that don't have access to all the information are the good guys, the people who we don't really have to worry about abusing that information. Yeah, so I would suggest we take a different strategy and try to invent systems that level the playing field of information disparity. Make it so that people don't assume information's private, they assume it's public, and as a result, all companies everywhere have to start acting accordingly, which will dramatically advance the goal of getting public key cryptography used to authenticate people.
It really seems to me, Bytemaster, that it's very contrary. I mean, why would you need stealth then? I mean, privacy is essential for freedom, and I hear where you're coming from, and I've heard this argument before with regard to if everything is open, then nobody has secrets, and it's all very transparent. Especially when you look at it from the standpoint of knowing finding out information about the people that run the government now. But I don't know. I just doesn't sit right with me. It doesn't seem as though that's really the right way to go. I think it's going to have a backfire effect rather than having it be a positive effect. But you've thought about it probably more than I have, so I'm listening. I'm willing to listen to what you're saying here.
I'm not saying if you want to have privacy, you use stealth and confidential transactions to keep your bank account balances private. But you don't depend upon privacy where someone else has access to information that you don't have, right?
It's like no privacy for the old data, and with all the high-profile hacks all the time, and the fact that governments can be hacked and they already have all this data, it's like your mother's maiden name, your pets, all that stuff, your porn surfing habits, all that should be assumed that it's going in the direction of that's going to happen. But from here on, we can have privacy with the new technology.
Right. Either you have real privacy or you don't. And trying to maintain the illusion that you can keep something private that someone else knows about you, right? Was it two can keep a secret if one of them's dead? That's exactly what it's like. Yeah. Whenever you do business with someone else and they ask you security questions, you're giving them the keys to your identity. How many companies have you given that information to? Right? You feel like it's still private, but it's not. How many people in your life know those individual facts about you? It's not really a secret. Some stranger might not know it about you, but that doesn't mean they couldn't find out for the right price.
But also, all the information, because the governments are nefarious, is deniable anyway. You can always say, no, that wasn't me at that website. I'm just being framed.
Right. So you can always say, well, I didn't take that action, or I didn't do that thing on this website. And now it's, was your identity stolen or not? Now you have to have a court case to figure out, well, did you not or not? It ends up being ambiguous. And then it turns out that the terms of service said that you agree by using this website that if anyone logs in here, it's you. Well, guess what? You've lost the case before it even began. You're not really secure. And people continue to deploy these insecure systems. If you really wanted to force everyone to migrate to more secure systems, you would make all of this information as public as possible. So it should be like a small town. Reputation matters. The more people know about you, the better you have to behave. You shouldn't have secrets. Now, people like secrets. People like privacy. And I get it. I want privacy. But privacy is something, it's a double-edged sword. Bad things happen in the darkness, and the light of day brings out the best behavior in everyone. But it's a real question, and I'm not saying that I've got the right answer here. I'm more of posing a hypothesis that if everyone's name, address, family connections, and picture, and credit history and debts, if anything anyone else knows about you was aggregated and made public, then the only thing that you can have privacy on are those things which you don't tell anyone else, or you don't tell anyone except those who you trust not to reveal it. So I think it would make people get a lot more conscious of things, and it would ultimately result in a world that had more real privacy and more real security. versus what we have now.
How do you contrast the activities of, say, Facebook, which so many different people put so much information about themselves out there? Do you think that increases their risk for being taken advantage of or not? I mean, it seems like what you're proposing is more towards that kind of Facebook model.
Yes, what I'm proposing is everything on Facebook to be made completely public. And a lot of people wouldn't like that. But the reality is everything on Facebook is completely transparent to those in power. And those in power are using your Facebook friends and family and connections and to figure out who has influence on whom. And if they ever do need to purge a resistance movement, they're going to go to that database and track down anyone who's even tangentially related to someone who's been vocal against the RIGME. Right?
Well, that's my point. If you don't participate in Facebook and don't populate all those databases, then obviously you're not getting the advantages of those databases, but you're also not going to surface the risk as well.
Yes, but just because Facebook's where everyone's voluntarily posting information, but the government's got their own records where they've collected and aggregated information on everyone that's not voluntarily posted, right? So when you combine the stuff that's on Facebook with all the other records that they have on every individual, they've got a complete picture. Facebook is just adding to it. And it's a picture that only they can use, right? We can't do the same. All right, who's everyone that's involved in the shadow government? We don't know that. We can't look at the same data to derive who are the known associates of so-and-so.
There are some websites now that do let you list cops' addresses and track government bureaucrats. That is starting to happen a little bit.
My whole take on it has been really what I've learned from the whole blockchain development with BitShares is try to remain neutral. I don't think that you can come up with a better decision. I mean, there's this whole spectrum.
The reality is that privacy and trying to maintain privacy is something that a lot of people are very much for, and they're very much against anything that would try to strip them of their privacy, and that it's a very controversial subject. I only bring it up because I like to ask questions that no one else is willing to ask or to think about, turning things upside down from how we normally think about it. If we can't actually have our privacy, what would happen if we went the other extreme and made as much as possible public? What impact would that have on society? And if trying to keep your stuff private, it's a losing battle. You can't do it. You can't sustain it, right? You can sustain keeping things public. It's not sustainable to keep things private.
You don't think that webs of trust could accomplish that?
Well, you can pick who you share information with. And if they're, if they don't post information on you and they keep it between you, that's fine. It's just a matter of recognizing. It's sort of like if everyone's an informant, right? Well, what if we all inform on each other constantly? And not just to the government, but everyone informs on everyone else, and it's all kept in one giant blockchain database. And you have reputations associated with how accurate the information it is that you provide on other people. The result is everyone would have a better picture of the truth, and no one would go about their lives under the assumption that they can escape their past, which means they'd be more careful with their present actions. It means you'd have more verified information out there. Yeah, I guess Wild Weck says, is the need for privacy a symptom of a bigger problem? And I think that's a very interesting question to ask. At some point, it's sort of like the nonviolent approach to revolution. You would think that you've got to fight the bad guys, you got to go and rally the troops and go shoot them. But sometimes taking the nonviolent approach and just walking into their batons as they beat you down has the effect of making them lose the moral high ground, and it wears down the enemy, even though it seems counterintuitive to take a beating voluntarily. I think that the more we try to protect our privacy, the more we give power to those who have access to information. It's sort of like a nuclear bomb is, well, that's the Trump weapon, right? If one country has a nuclear bomb and another country doesn't, you don't go to war with them. You don't go to war with the government because they know everything about everyone. But if everyone has a nuclear bomb, there are no more wars because it's mutually assured destruction. If government agents can't get away with doing things in secret, they can't keep their acquaintances secret, they can't keep, it's just impossible to maintain the web of lies because all that information is made public by everyone because everyone is informing on these people. And all their pictures are known. That you can't have secret agents anymore because here's a picture of someone. I'm using face recognition to look them up in a public database. Oh, looky, I see where this person is. I've tracked them down into their family. I know that they're working for this government. You get rid of secret agents entirely. It changes the equation entirely for all of society by making everything as public as possible. And I'm sure there's some downsides. I'm not saying it's all upsides. Bad guys can use this information to track you down. Stalkers use this information to follow you around. But it's a trade-off between dealing with private criminals versus dealing with large, centralized, organized crime. Right? Organized crime magnifies the power of bad guys relative to individual crime. So that's my idea of the day. Be very interested to hear feedback either here or on the forums to continue the discussion about whether or not seeking solutions in that area is something worth considering.
I would like to just say that when you present this thought experiment or this concept, that you don't necessarily need to talk about a proposal that everybody make everything public, or that it's the way we should go. It's just something you can point out that is happening, and it is happening for government agents as well. We are finding out about them. There are websites that list them. So it's more like this is the trend that things are going in, rather than I want this to happen.
Right. Don't fight the trend. Go with it.
Yeah. Basically, just point it out. Just say this is where things are going. This is how can it not go this way? And it does need to go equally towards that we are monitoring them. So my Schmacks idea, I've set up Schmacks.com and the user issued asset Schmacks, and I just got 100 account names. I spent $30 to get names like George Soros and Hillary Clinton, all non-premium names. And so the permanent record, I'm going to auction off people giving these prominent people and goofy celebrities their first 100 schmacks or whatever, and start the reputation ball rolling. But anyway, I think you don't have to say that this is a direction I want. It's more of a direction that we're going in. And then the other thing to emphasize is even though your personal information is getting out there, because of these nefarious actors, because of their insecure databases and their penchant to frame people, none of it is necessarily true anyway. So it's all out there, but it's kind of fuzzy. It's not necessarily something you have to worry about getting out there because it's deniable.
It's sort of like if you make all that stuff public, you say, hey, anyone could have stolen that information. It basically gives you an argument that says anyone who did anything based on this information, it's not necessarily me. That is not proof of me. But basically, there's a huge problem with identity theft, and it's only going to be solved by moving to private key authentication schemes. And I think it's very good advice, is point out the trend, analyze the pros and cons of what could happen if the trend continues to its logical conclusion, and then analyze what is it possible, fight the trend, right? What does fighting the trend actually mean? And so on and so forth. I think great advice on how to broach the subject, because you're right. On first glance, everyone's gut instinct is, I want my privacy. What do you mean you're trying to take my privacy? It's much better to point out you're already losing it, and you just haven't recognized it yet.
I just wanted to mention that I really appreciate the the talk about the INTJ and just where you kind of reveal yourself some, and you know, I get a lot out of these mumble sessions, and I like that you are transparent by.
I appreciate that. So, someone had asked a question here. Where would they start, city, state, or country? I've said it before, and I'll say it again. Everyone is going to adopt blockchains for their websites moving forward, because every application can benefit by being on a blockchain. So it's just a matter of time before people realize they don't need to look for new solutions or new business opportunities that blockchains make possible. I'd say the blockchains don't. The analogy I've been using is a blockchain's a new material. It's like steel. And everyone's built these skyscrapers out of wood, but they're prone to fires and they can only go so tall. Blockchains allow us to build skyscrapers out of steel, but you still have to have solid business, a solid website or an idea that would be equally viable without a blockchain as with a blockchain. And the blockchain just makes it better. So our government's going to adopt blockchain technology? Yes. Our business is going to adopt it? Yes. Everyone's going to move to blockchain technology as soon as people understand the benefits are universal. And so that's what Cryptonomex is in the business of doing, is providing tools to help people migrate their applications to blockchain technology. So you'll definitely be seeing a lot more from Cryptonomex in the next couple of months as we roll out more information about our approach to getting blockchains everywhere, our counter to Ethereum, if you will. And initial conversations we've had with prospective clients is that they like the approach we're taking to solving the problems that Ethereum tries to solve. Anyway, that's what I've got there.
That's how you're going to end it.
That's how I'm going to end. New partnerships yet to be announced. There's more than I can count. Stan has been very busy talking to lots of different people. I've been talking to people, so I can't give you an exact number. There's just a lot of people with a lot of interest in blockchain technology and what we're doing. So it's also hard to quantify the nature of those partnerships. Are they with Bytemaster or are they for BitShares? So I can't exactly answer those questions, but there are a lot of people that are interested in doing things. And I think that with the recent revenue sharing of BitShares, with people who are funding new features, we'll see people that want to do things like Uber on BitShares. They could implement the features of Uber as a set of operations, get a share of the revenue, and now everyone's using BitShares for their Uber ride sharing, right? Those are the type of things that people can do on BitShares. And by opening up our protocol to say, hey, we're open to adding new features, adding new capabilities. If you build it, we'll include it and we'll allow you to charge a toll. That's a very interesting opportunity for people who want to build applications. It's an opportunity not readily afforded other blockchains. Right now, you've got two options. Or three options: build your own blockchain and basically be your own silo. Two, build on Ethereum and build a script that interfaces with the other scripts and can be deployed without having to ask anyone. Or three, build on BitShares and get a cut of the revenue. BitShares offers the benefits of being a faster, more efficient platform that can allow your applications to deliver a better user experience than they could get on the other blockchains. It also offers a more unified view of the entire blockchain compared to a bunch of scattered smart contracts that may or may not overlap in their use of one another. So those are the options right now. And I think that a lot of people will see the benefit of building their app to be compatible with everything that's going on BitShares versus building it on their own blockchain or on Ethereum. All right, guys, I'll catch you all later.
Yes, thank you, Bytemaster, and thank you everybody else for attending. Make sure that you sign up here. I'm going to go ahead and give you the Mumble attendance logs. You never know what these lists are going to be used for, and that's probably good and bad, to be honest, but mostly the things that I'm thinking about are generally good. Because we're starting to see a lot of people liking to use the share bot and learn how to do some of these things. So you might find yourselves given a bunch of various tokens from sponsors, UIA sponsors and things in the future. Who knows? I'm not going to make any promises, but that's something I think would be pretty cool.